Did you know that nearly 90% of all millionaires have built their wealth through real estate? That's a staggering number, right? But here we are in 2025, and the big question on everyone's mind is real estate still the golden ticket to financial freedom, especially for young investors in the US? The landscape has changed dramatically. We've seen fluctuating interest rates, crazy market swings, and a whole new generation wondering if owning property is a dream or a financial nightmare. So today, we're going to cut through the noise. We'll break down the real pros and cons of investing in real estate right now, explore the long-term potential, and uncover some crucial truths you absolutely need to know before you even think about signing on that dotted line. Is it still the best investment? Let's find out. First, let's talk about the good stuff. The reasons why real estate has been a wealth-building machine for centuries. The biggest pro is appreciation. Historically, property values tend to go up over time. While markets have ups and downs, holding a property for the long term usually means it will be worth more in the future than what you paid for it. This is how people build serious equity. Think of equity as your ownership stake in the property. As you pay down your mortgage and the property value increases, your equity grows. You can later tap into this equity through a home equity loan or line of credit to fund other investments, start a business, or even buy another property. It's like a built-in savings account that grows on its own. Then there's cash flow. If you buy an investment property and rent it out, the rent you collect from your tenants can cover your mortgage, property taxes, insurance, and maintenance costs. Whatever is left over is pure profit in your pocket month after month. This passive income stream is a game changer for financial independence. It's money you earn while you sleep. Plus, the US tax code loves real estate investors. You can deduct a ton of expenses related to your rental property, like mortgage interest, property taxes, repair costs, and even depreciation. Depreciation is a fantastic tax benefit where you can deduct a portion of your property's value each year, even if the property is actually going up in value. This can significantly lower your taxable income. Another huge advantage is leverage. This is a concept that truly sets real estate apart. Let's say you want to buy a $400,000 house. You don't need to have $400,000 in cash. You can get a mortgage with a down payment of, say, 20%, which is $80,000. But you get to control and benefit from the entire $400,000 asset. If that house appreciates by 5% in 1 year, that's a $20,000 gain in value. Your initial investment was only $80,000, so you just made a 25% return on your cash. That's the power of using other people's money, in this case, the banks, to multiply your returns. And finally, real estate is a tangible asset. You can see it, touch it, and live in it. It's not just a number on a screen like a stock. It provides a sense of security and stability that digital assets just can't match. Okay, that all sounds amazing, right? But it's not all sunshine and rental income. Let's get real about the cons, because they can be significant. The biggest barrier to entry is, without a doubt, the high upfront cost. For young investors, scraping together a down payment, which can be tens of thousands of dollars, plus closing costs, is a massive hurdle. Unlike buying a few $100s of stock, real estate requires a substantial capital commitment right from the start. And once you're in, real estate is highly illiquid. That means you can't just sell it in a day if you need cash. Selling a property can take months, and there are significant costs involved, like agent commissions and closing fees. So if you need your money back quickly, you're out of luck. Then there's the reality of being a landlord. It's not always passive income. It can be a very active job. Imagine getting a call at 2 a.m. because a pipe burst. You are responsible for maintenance and repairs, and they can be expensive and unpredictable. A new roof, a broken HVAC system, these things can cost thousands of dollars and wipe out your cash flow for a year. You also have to deal with tenants. Finding good, reliable tenants can be tough. Bad tenants can cause damage, stop paying rent, and force you into a lengthy and costly eviction process. It can be a legal and emotional nightmare. For anyone thinking of becoming a landlord, I highly recommend reading a book called The Book on Managing Rental Properties. It's a lifesaver and gives you systems to handle everything from screening tenants to managing repairs. I'll drop a link to it in the description below. And let's not forget the market risks. While real estate generally appreciates long-term, markets are cyclical. There's no guarantee that the property you buy in 2025 will be worth more in 2027. If you're forced to sell during a downturn, you could lose a significant amount of money. Interest rates also play a huge role. The higher the interest rate on your mortgage, the higher your monthly payment, which eats into your potential cash flow and makes it harder to qualify for a loan in the first place. The rate you lock in can make or break your investment. So, what should young investors consider before jumping in? First, your personal financial situation is key. Do you have a stable income? Have you paid off high-interest debt like credit cards? Do you have a healthy emergency fund at least 3 to 6 months of living expenses? You need this safety net because homeownership comes with unexpected costs. Don't drain your entire savings for a down payment. You need to be financially secure before you take on the responsibility of a mortgage and property maintenance. Next, consider your life goals and timeline. Are you planning to stay in one city for at least 5 to 7 years? If not, buying might not make sense. The transaction costs of buying and selling can eat up any equity you build in a short period. If you value flexibility and the ability to move for a new job or opportunity, renting might be the smarter choice for now. Real estate is a long-term game. It's not a get-rich-quick scheme. You need patience and the ability to ride out market fluctuations. The real wealth is built over decades, not months. Also, do your homework. Location, 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 it's a cliche for a reason. Research neighborhoods thoroughly. Look at job growth, population trends, school ratings, and local development plans. A property in a growing area with strong economic fundamentals is far more likely to appreciate. Don't just buy where it's cheapest. Buy where there's demand and potential for future growth. A great tool for this kind of research is a book called The Millionaire Real Estate Investor by Gary Keller. It provides fantastic models for analyzing markets and deals. I'll link that in the description as well. It's a must-read for anyone serious about this. And what about alternatives? Real estate isn't the only path to wealth. For young investors, other options might be more accessible. You can invest in the stock market through low-cost index funds like the S&P 500. It's highly liquid, has low barriers to entry, you can start with just a few dollars, and has historically provided strong returns. If you still want exposure to real estate without the headaches of being a landlord, you can invest in REITs or real estate investment trusts. These are companies that own and operate income-producing real estate. You can buy shares of REITs on the stock market, just like any other stock, and they often pay high dividends. It's a way to diversify into real estate with much less capital and effort. So, the verdict for 2025, is real estate still the best investment for young people? The answer is, it depends. Real estate is still a powerful wealth-building tool. The benefits of appreciation, cash flow, tax advantages, and leverage are undeniable. If you have a stable financial foundation, a long-term mindset, and are willing to do the work, it can absolutely set you up for life. However, it's not a one-size-fits-all solution. The high costs, illiquidity, and responsibilities of being a landlord are serious drawbacks that shouldn't be overlooked. For many young investors, starting with more accessible investments like index funds or REITs, while saving for a future down payment, might be a more prudent strategy. Don't feel pressured by the hype. The best investment is the one that aligns with your personal financial situation, your goals, and your risk tolerance. The key is to get educated. Run the numbers for your specific situation and make an informed decision, not an emotional one. Real estate can be your golden ticket, but only if you're ready to pay the price of admission. Thanks so much for watching. I hope this gave you a clearer picture of real estate investing in 2025. If you found this helpful, Please hit that like button and subscribe for more content that helps you build wealth and live a better life. Check out the links in the description for those books I mentioned. They are fantastic resources. What are your thoughts on real estate investing right now? Let us know in the comments below. See you in the next video.